Good morning, good morning, good morning. It is Monday, March 26th, 2024. My name is Jason Allen. I'm a realtor based in Palm Springs, California. And every Monday, I try and focus on one of the different cities that I work in. Now, I do service the entire Coachella Valley, either directly or through one of my partner agents. So when things get a little bit farther than where I focus, that's when I'm going to team up with someone. But Palm Springs, Cathedral City, Rancho Mirage, and Palm Desert are my core markets. And so I like to take one of those cities each week, focus on what the numbers are doing, and tell you what's happening in our marketplace. If you pause one moment, if you wait one moment, I'm going to bring up the screen that I share, and then we'll start talking about stuff. Here we are, Palm Desert, California. For those that aren't familiar with the desert, Palm Springs is where you fly into if you're coming from outside the neighborhood, or as you take the 111 exit off the 10, you dump right into Palm Springs. Cathedral City is just to our east. After that is Rancho Mirage, and then a little bit further is Palm Desert. Really a suburb of our fair city. Uh, the downtown might be considered El Paseo, which is a rather fancy shopping district. And it's maybe 20 to 25 minutes from Palm Springs proper during season when we have the most traffic. The off season, summertime, you can go from here to there in about 15 to 20 minutes. So as I do each week, I start with single family dwellings and I go into condos. Unit sales has unchanged from February 2023. These numbers are comparing this most recent finished month for which we have data, so February, because here we are towards the end of March, comparing it to the previous year's February. A lot can happen in 12 months. So some of this is really dynamic. Last month, I can tell you what's happening in the marketplace is a little bit different right now. But let's just look at the numbers. So unit sales, 52, that's unchanged from last year. Median sales price is the houses that sold right in the middle, or the house or the condo that sold right in the middle in terms of price. We use that because averages can be very deceiving. Now, we use averages in some cases, but when we talk about an average sales price, we could have a multi-million-dollar house sell as a fluke and it throws the average off. So rather, we chart the median, the house that sold right in the middle. And this time around, $620,000. That's up 13.8% from February of 2023. Inventory is up 6.5%. So we're at 231 housing units or single family housing units. And that's a higher inventory than last year, but not dramatically. And in fact, if we want to flip into a buyer's market, we actually need a whole lot more houses and condos to come to market. So low inventory, although we're higher than last year, low inventory is keeping prices fairly stable. You'll see that in a later chart. Days on market is down 4.3% from last year. We use the days on market as kind of a barometer of how quickly things are being absorbed. If we jump over here to this month's supply of inventory at 3.72, that's up 11% over last year. But the idea is that if we're selling 52 units, 52 houses a month, and we had no additional inventory come on, it would take about 3.75 months to sell every house that was available. And days on market is how quickly that's being absorbed. Roughly 2 months on market, that's really not bad. Because when you consider that days on market includes your escrow period, that means it was roughly a 30-day marketing period and then a 30-day escrow period. Sales to list price, folks are getting almost what they're asking. 98.2%. So you're down 1.8% on average. And that's actually up a tick from February of 23. In this case, this 96.6, this is when the seller has taken more than one or more price reduction. In those cases, on average, the seller is still getting almost 97% of what they originally wanted. Now, how do we get there? In other words, do all houses sell for roughly 3% off or 2% off? No, it's done by averages. And we're seeing that 32%, almost 33% of the properties are selling over asking. So that's balancing out those that are taking deep discounts. And this number is actually 21% higher than it was last year. So what does that mean? And I sound like a broken record for all our markets, but essentially sellers are much more realistic when they're putting their house on the market. At the high, they might have gotten 500,000. They're being more realistic and putting it at 480, 460, 420, depending on the condition of the property. And then the buyers are coming in and recognizing value and offering more than what the seller is asking. So 32% of homes are selling of the 52 that sold are selling over asking, and that's what's buoying this number up. We talked about month supply and then the median sales price per square foot. So now what we do is we look at the price per square foot. What's the median, the one in the middle, 356, and that is 5.5% higher than February of 2023. Let's jump over to condos. We'll go through the numbers more quickly since you now understand the concepts. Unit sales were down 10%. Median sales prices up 7% at 556,250. Inventory is virtually the same at 182 units. Days on market 49. That means condos are going into contract much more quickly. It stands to reason as prices are still elevated. If you can't afford the $500,000 house because now it's only a 2-bedroom, 1-bath, you might jump to a condo that's a 2-bedroom, 2-bath at about the same price point. Or maybe a 3-bedroom, 2-bath, so you get more space or a better location, and you're roughly at the price point that you wanted to be at. Sales to list price down slightly, but not significantly over last year, but they're still seeing condo sellers getting about 97% of their list price. And then 95.7% when they've taken one or more price reduction. 22 sales are going over. Month supply, roughly for median sales price per square foot, gone up at 355, about 6% higher than last year. 44% sold within 30 days, 66% sold within 60 days, 86% sold within 90 days. So that left 14% that either were still on the market after 90 days, expired, or were pulled from the market. And it just occurred to me, I didn't do those numbers for single family homes. So let me jump back over and say 33% within 30 days. And of this 33, I'll bet you that those 32% here were going over asking. Those are folks that are jumping on a value, making an offer that's commensurate to the value, and locking it up quickly. 54% sold within 60 days, 71% sold within 90 days. I'm going to pop over to this other chart that I like to use from Chicago Title. Houses, condos. And here what I like is that I can segment the market. And you can see, and this is variety of here. Let's go to median sales price. You can see median is pretty much flat for houses. For condos, also flat. The high end is maybe down slightly, not significantly. We took our big hit, at least in the high end for condos in Palm Desert back in 22. Second quarter, June of 22, July of 22. That's when we saw things just take this precipitous drop. Interest rate driven, coming off of COVID. Now things are just kind of bumping along, very stable. I would say anyone that's trying to time the market is being foolish because at some point, go back over here, same thing. You see the same trend. Now we're just bumping along. Anyone that's trying to time the market, you tell me, what's your crystal ball? I mean, focus on what your needs are. Do you want to have a house in Palm Springs, condo in Palm Desert, a place in Cathedral City to retreat to during winter back home? Do it now. Are you thinking of retiring? And should I sell my house in, Chicago, San Francisco, New York and move here? By all means. Like, we only get time, my friends. And is there anything else I wanted to show you? Median list price and Yeah, I mean, that's essentially it. I'm happy to review any of these numbers in a private Zoom call. If you wanted to talk about Desert Hot Springs, let's say that's an area you want to focus on, maybe an Indian Wells, much smaller market. So as a consequence, the numbers are a bit compressed, but I'm happy to do that. We can go through each and every one of those Chicago title charts that drop down. And that's it. That's the market recap. Now, if Christopher is still watching, Christopher, I want to apologize to you. From time to time, folks will call me and I encourage those calls. I'm happy to take them. But there are certain things I can't talk about. And my call with you was somewhat rushed. I apologize for that. And the question with respect to a good neighborhood in a given city. Fair housing laws prevent me from even discussing that. Now, it would make sense that as a realtor driving around a city, selling properties in a city, I know what would be considered a desirable neighborhood or a good neighborhood or a neighborhood that is where I'd want to set up shop, set up my life, set up my home, set up my family. Here's the underlying problem. For one, what I consider a good neighborhood may not be what you consider a good neighborhood. Now, my goal is if you can tell me how you define a good neighborhood, and it's not based on race, religion, socioeconomic status, um, but rather where I can walk to shops or where I can walk my child to school, or I can get quickly on a freeway and off a freeway. Uh, so we have to go there. We have to talk about what's important to you. And if you talk about things like race or socioeconomic status or where, you know, undesirables are, I'm going to walk away because A, that's antithetical to how I operate and my perspective on people. It's also against the law. And why is that against the law? Because unfortunately, the real estate industry for a very long time did terrible things, steering people to neighborhoods, blockbusting, and um, and contributing to society's ills by fundamentally impacting how neighborhoods were shaped with things like restrictive covenants and knocking on doors and telling people that this family is moving in down the street and you'd better sell right away or your house value is going to drop. So I, I and anyone that's been in this business for the last 20 years or came into this business within the last 20, 25 years, just a different breed of people by and large, and not interested in going there. So I apologize if I didn't have time in the course of our conversation to fully explain that. You're welcome to call me back. We can talk some more about it. And then I would just add, um, I fully respect that you have an agent outside of the Coachella Valley that you trust and you want to work with. And while California real estate practice and law in theory functions throughout the entire state, I'm licensed in the state of California. I can represent someone in Sacramento or Lake Tahoe. I don't know that market. And I have a responsibility to my client to be assisting them to the best of my ability and to an ability that they should be able to expect. So, in other words, when you bring your agent over from LA and they don't know where the shopping is or where the freeway entrances are or what represents a good value in a home, I would respectively suggest that that agent should refer you to someone that is in that local market. While I used to sell real estate in San Francisco, it's been many years at this point. It would be irresponsible of me to represent a buyer or a seller in San Francisco without them fully understanding that I haven't been in that market for years and I don't know what has changed. I could bone up on it, I could study it, I could learn it, but is that really what you want? So there you go. Feel free to call me back. Better that we schedule time to talk. I'm happy to have more conversation, dive into what is important to you in that city that we discussed, um, and represent you if that's what you want. That's all I got for today. Have a magnificent week. Our weather has turned absolutely stunning. We even had some rain yesterday. That's gone. And now it's just beautiful. Join me here. Move here. Visit. And that's all I got. Have a great day.